Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. After last week's moves, markets have been on the calmer side as geopolitics, yen carry trade stories take a back seat. Markets would be focused now on assessing where they stand with respect to the September rate cuts. And for that, this week we'll be paying attention to the US retail sales, CPI, and of course the Jackson Hole Summit. Good morning, JK. How are you reading the markets and your thoughts ahead of the key events?
Hey, good morning. You are right, Swaraj. It has been a very quiet period now after tumultuous movements that we saw last week, starting with BOJ rate hike, and since then we have had no fresh factors to focus on, and there was hardly any market moving data on Friday as well. In fact, the whole of last week we had a light data calendar, but yes, yen-related moves were still happening. Importantly, risk sentiment stabilized by the close of the week as Japanese officials have now turned their attention to stock market weakness from the Japanese yen weakness and made statements to indicate no immediate further rate cuts are possible. In fact, considering the huge debt that the Japanese government carries, I doubt if rate hike can happen again in a hurry, and hence market should settle down and look at what's happening elsewhere. After extreme volatility we saw from previous Friday, as it calmed down, stocks and currencies have slipped into kind of a range now. Of course, there was a sharp recovery in US markets and many other markets as well. But what people were looking forward to is there any statement from Fed members after the unemployment? But we have had very little statement. Like we used to have earlier too many speakers reacting to the data and all that. But one significant statement came from one of the members, Mr. Schmidt, who said that looking at the broader employment indicators, leaving unemployment rate alone, labor market still appears to be quite strong. That is his view, and he's also saying that the real GDP increased by 2.75% in the second quarter, supported by continued strength of consumer demand and solid investment spending. So he continues to hear about a general tone of optimism and resilience. At least this is something that the market had to digest or react to. So there was somewhat of a retracement in the yields. Yields are also, of course, supported because there's a lot of borrowing that the government does. So this will be the lows that we have seen last week in the yields is going to be bottom for some more time until we get more indications. And of course, we have a lot to look forward to this week. A busy week starts with the CPI from India and also industrial production, PPI and CPI data from US tomorrow and day after. Retail sales and the Michigan preliminary survey also follows then on Thursday. Get a series of data from UK and then Eurozone economy, while macro data, including IP, retail sales, and employment from China, will not escape our attention, in the coming sessions. So it looks like also a calm ahead of storm in the geopolitics, as we are hearing strong verbal statements from both Israel and Iran. We are also hearing about Ukraine invading a certain region in Russia. So we should look forward to some sort of a response from Russia as well. So these things seem to be supporting the gold and bond prices, while stocks have tentatively held on to their recovery. The biggest question that investors and traders are trying to answer themselves is the yen carry trade unwind over, or is it halfway, or it is only a very small portion that has been unwound, because we know that yen has been having a negative interest rates for quite some time, and it's very difficult to imagine that whole of it would have been unwound in such a short period of time. So that means both the dollar yen and the stocks will be sold on upticks, and they must be biding their time, because officials are currently very keen on containing the further nervousness in the markets also. So dollar is staying at the lower end of its range, particularly against the euro and the commodity currencies that awaits fresh triggers. Rupee is close to its all-time highs entire last week. Technicals do show that USD will be higher in the coming days, perhaps break 84 also. But the volatility is likely to be much, much lower and non-disruptive. In fact, the implied vols on the rupee chart for 6-month options show that the vols are at multi-year lows. So market does not expect huge volatility, although the direction is definitely on the higher side for the USDINR. Today we have the CPI number from India, and one should not be surprised to see a low number like a 3.5 or 3.75, 3.75 as against 5.10 that we saw last month. But this is entirely due to the base effect, because in July 2023, the inflation rate was at 7.5% around. And so the base effect is likely to, the prices compared to last year's high, and last year's increase and this year's increase will be much lower. Therefore, the inflation rate for this July 2024 is likely to be much lower. But as the governor said, this base effect is likely to vanish very soon, and you will see the normal numbers from next month onward. So that is something that market is not unlikely to react to a low number, because that is already discounted. But yes, otherwise we look forward to more indications from the US economy, definitely retail sales on how the consumers are behaving, and CPI on how the price pressures, whether they have stopped abating or whether they fall further, which has big implication. Just to highlight, the market had a nearly 70% probability of 0.5% rate cut from Fed in September, but that's now down below 50%. So market is calming down, getting more more reasonable on their expectations, so which is more likely to be the case. Thank you.
Thank you, JK. And just to quickly summarize, risk sentiment stabilized. So the BOJ even making statements to calm the equity markets, a change from their focus on the yen. Otherwise, stocks and currencies have slipped into ranges. And as JK mentioned, the rate cut probability for a 50 basis cut in September by the Fed, which was earlier at 70%, is now down below 50% as markets rationalize a little bit more. Rupee traded close to its all-time lows near 80, 83, 90, 84 region, but volatility is expected to remain low. We, of course, have the Indian CPI number to look out for today. And as JK mentioned, because of the base effect, that number might be on the lower side. That's it from us today. Thank you for listening. Tune in tomorrow for the latest in the financial markets.